Okay, good morning, traders. Welcome to this live intraday strategy webinar. Today is Thursday, June 10th. Mike Boutros with you on the horn. Good morning to everyone in the room. So we are range bound. We just got the release of core inflation in the United States coming in at 3.8%. That's topping the 3.4% expectation. If we get deeper into the metric, the year-on-year print comes in at 5%. And dollar reaction so far has been a little muted, but we are seeing a little bit of a bounce here. Really, the core reading at 3.8, that's going to be the largest clip that we've seen in a while. Previous read was 3%. Everyone's going to be looking to see whether this print proves the transitory or disproves the transitory idea. Should be interesting start to the day, though. Good to be with you guys this morning. ECB didn't give us much also, so we'll go over those levels on the euro, DXY, Aussie. Dollar yen's got the opening range. Dollar CAD nearing resistance. Sterling nearing support. Bitcoin, big move there. Take a look real quick at the 10-year. Kiwi, gold, and the SPX. As always, any other questions or trade setups, guys, feel free to throw them on the message board at any time. Really quick, we've gone over the dollar a few times this week, so I don't want to get too into it. You guys remember the main focus for the close of the week is going to be the 89.93 yearly open support that needs to hold. If there's any hope for a dollar recovery off this level this week, again, momentum, remember, grounding right into 40 on that turn. So we're definitely looking to see what kind of play we get here this week. Here's what it looks like on the daily chart. So we're still within the monthly opening range, obviously. We talked about this slope. The efficacy of this slope was that a false break. Here's another attempt. At the end of the day, we're looking for a break of the monthly opening range. Yesterday, grounded out right at the monthly open, which is 89.81. The low executed yesterday or registered at 89.83. All right, so we're still in a pretty well-defined range near the yearly open at 89.93. Here's what it looks like on the intraday. So no change to the slope. Here's what we were looking at earlier in the week. Here's what it looked like into the open. I mean, it's been a pretty textbook play. The only thing is we just haven't even cleared that Monday opening range. Here's your Monday drop. Support held, we rebounded, weekly open resistance held, pulled back, dropped right back again to the yearly open, which held support, bounce higher. Here's your weekly opening range highs, that 90.30. So look, if we do pop, if we get a Thursday breach of the weekly opening range, the only thing that concerns me is that you have the median line there, so watch for a reaction there. But if we do get a breakout, you're looking for a stretch towards essentially the monthly range highs. It's going to be 90.62. So the slope looks pretty decent. Still going to continue to work with this gradient for now. Bullish invalidation. Guess what? Same support that we're looking at with the weekly, 89.93. All right, so the levels are pretty well defined here. Wouldn't be surprised if we do, by the way, see some sort of pullback on the release of this data. 5% inflation is. I want to go back and kind of look when the last time we saw a print that big. But geez Louise. See what markets do that heading into the US Open. Any questions on DXY? No change to levels. We are exactly essentially where we started the week. Need a breach above 90.30 to get this thing going. Hey Jay, sorry I didn't see you. Good morning there. Good to see you in the room. So that's DXY, number one. I don't think there's much to review there. Number two, again, 2, 3, and 4, Euro, Aussie, and dollar yen, all sitting in their objective opening ranges for the week. So here's what Euro looks like. Remember, again, on the weekly chart, Euro heading into resistance, the 22.11 barrier into 22.20. High week close for the year, 786 retracement. The 618 extension of the advance is right at the high. I'll show you there in a moment. But just as the yearly open is for DXY, so is this level key for Euro on a weekly close basis. That's the only breakout that you'd need to see on a close basis to get the validated move. Now, again, if we take this into the daily chart, looks a little cleaner from where we turned. Major key resistance, yearly open, 618 extension off the low. So that's 1, 2, 3. Caught the highs, nice reversal candle, broke uptrend support. Here's the drop, and here was the Friday rally that kind of suckered us all in and put things in a hole. So look, we're still trading below the monthly open. That's 22.23. You had some really nice divergence into that high. Was that the extent of the break? Ideally not. Again, just my humble opinion. Technical still look like it needs another pullback here lower. That being said, here's what we're looking at with the intraday chart. And here's what it looked like last night. So we had just spiked into the upper parallel, and it looked like a really decent touch of the gradient. You can't make this up. Perfect outside reversal on this hourly or 2-hour chart, pulled us lower. I was looking for a drive near 21.45, 21.47. That's a basic 618 of that advance off last week's low, and it's this week's objective opening range low. Didn't quite get it. Okay, 21.50 marked a low. Here we are with the, obviously this is a combination of the ECB and the recent release we just got with US inflation, but even if you take a deeper look at this, it still looks a tad heavy. So if we do get the tag of 21.45, a good area to take a little off the table, the break there, in my opinion, is where it would fuel the next leg lower towards 21. And 21, by the way, guys, 2103 is the objective monthly opening range low. All lateral levels are super objective here. So let's see how this pans out. 22 at this point. You want to drop down your bearish invalidation. I left it yesterday at you guys for 22.23. I would leave it 22. If we make it back through that 618, if we make it back through the slope specifically, I don't want to be a part of this at that point. Any questions on euro? Okay, keep in mind, by the way, guys, markets do seem to be in this boring holding pattern. Not only is it June and you get that summer doldrums effect, but you also have the FOMC interest rate decision on tap next week. So with everything that's been going on and inflation now, a second month in a row, just out like way over expectations, right? Is that going to force their hand? We're going to be getting the updated projections as it pertains to growth, inflation, employment, right? So we're going to get that deep dive into those quarterly projections next week. Hopefully get a little bit more volatility in price here. All right. So that's euro. Next, number 3 is Aussie. So I haven't updated Aussie in a while. You guys know I've been kind of disappointed with what's going on. I took a whole new fresh look, some fresh slopes yesterday, spent a good hour and a half, 2 hours on these charts, kind of just really getting a gauge for where we are. The pitchfork I kind of resolved on was this on the weekly chart. It's a modified pitchfork off the highs for the year. 1, 2, 3. Got some really nice median line support. There's the 25% parallel. Or the 75% parallel rather, holding resistance. Now, I'll show you the intraday chart in a moment. I'm actually looking at the 618 of that slope, which is giving us a little bit more cleaner touches. But the whole premise of this that we've been trying to talk about is this a break of the April uptrend from last year? We got a weekly close below it 2 weeks ago. Last week rallied and failed at former trendline support resistance. But this week, we still don't have any follow through. In fact, the whole thing's still sitting in the yearly opening range, right? In fact, the whole thing's just sitting just pips above the objective yearly open. What's going on? We need some volatility in Aussie. And here's what it looks like on the daily chart. So looks like Euro wants to make a run there. Aussie's got this formation here is the new one that we added. Here's the 618 slope. So this is just, instead of having this at the 25% parallel, it's going to 618 on both sides. You can see resistance, 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 resistance. Monthly opening range set up right below downslope resistance. Bearish invalidation, 78.25. Break looks for key support down lower near 76, 75.97. And the objective yearly opening range lows is 75.60. So again, range. Here's what it looks like on the intraday chart. Looks like yesterday we were trying to maybe tickle a break below this level. Obviously, that inflation release is not helping much, just getting a kick back. Here's what it looks like yesterday. Here's what it looks like right now. A little bit of a dribble there. Here was the reversal. Didn't get any follow through. And here's the recent release. So look, at the end of the day, the weekly opening range remains intact below 77.67, which is resistance, Friday's or last week's highs. The 50% retrace of the drop. If you get a breach there, 78.25 is bearish inval, but 78, you got 77.96 is the 618 of the drop. Just zoom this out to a 240, give you a little more space. And then the objective 2018 open, you see a major pivot in this whole zone. So again, I'm a favor of more Aussie weakness, broadly speaking, but on the back of that Friday stretch, if we do crack this level, you'd have to allot the possibility for a test of downtrend resistance before resumption. So don't want to get too carried away with this print here. We'll see how this has any follow through heading to the US Open. Any questions on Aussie? You're light on data pretty much all through next week too from Australia. You got the employment figures on the 16th. So basically like heading into the close of next week or mid next week. Okay, that is Aussie. Opening range intact. One more opening range intact is dollar yen. And specifically, these four opening ranges we're talking about, guys, Euro, Aussie, dollar yen, and even DXY to a degree. We're looking for these ranges to kind of clear out either today or tomorrow heading into the close of the week as per the opening range strategy. But here's dollar yen with an exquisite turn and just really clean levels, right? We talked about this region on the weekly chart, the false break we got last, I guess last month this is, April. Here's the rally, last week's reversal, failure to clear, again, 109.92, 109.68, key level. And here we are just pushing into this zone. Not much to be said on the weekly chart. Here's the daily chart. Looks like it could be just a near-term wedge consolidation, right? In which case, if you do clear 109.92, you're still looking for 110.55. That was the 100 off the low. But I'm still going to stick with this slope for now because the median line intersects that same key region today into the close of the week, 109.67, 109.92. Here's what it looks like on the intraday. So into the start of the week, the levels were literally unchanged, guys. So here's what it looked like into the start of the week, right into the Sunday open. We noted this key range that we wanted to see and a break for our near-term directional bias. That key range has been tested twice on both sides, right? So here's what it looked like last night. Tested as support, held. Tested as resistance. Well, right into the open of the week, resistance held. Support again held. Resistance again held yesterday. Here we are. If we breach 109.90 is a 618 of the drop, look for reaction there. Beyond that, you're looking for a resumptive move right back into 110.56. Again, super bullish on the case of a resumptive move right from here. I would have loved to see a tag of trendline support or uptrend support, but at the end of the day, if the weekly opening range gives out, clearing of 109.90 puts us right on track to that 110.56, 110.67 level. It's the high day close for the year. So pretty important levels, a very risk-sensitive pair. If the markets run with this inflation read, you might see a little bit more of a pullback here if the yen starts to gain some pace. At the end of the day, we're going to treat this as an objective weekly opening range as we head into the US Open today. Questions on dollar yen? That is number 4. All right, dollar CAD. So you got the BOC yesterday, didn't really get much of a play, but it's interesting that despite the whipsaw action, dollar CAD didn't even attempt to make a break per se of its weekly opening range, which is taking place right above support. So again, we've been following CAD for a while. If you go to the previous update, guys, as I always have links for you, you can see this is where we started last week. This was where we were a day before, right as we opened. We had come right off that support. It was a big key support that we were talking about. That came back. We've still been stuck in this same zone. There's support again. There's resistance. 121.33, 121.45. That's what you need to clear to validate breakout and near-term reversal signal. 122 and 22.50 would essentially be your first topside objectives. On the downside is where this gets really hairy. Remember where we are on dollar yen from the weekly charts, right? Anything close sub 2050 on a weekly basis, in my opinion, would be terminal. Again, you're looking for 119, you're looking for 118. That being said, daily chart. What do I want to focus on here? Well, again, when things get murky, take it back to basics. Here's your monthly open, monthly opening range low, monthly opening range high, key range break, wait for the breakout. Anything on the interior, go for it. A lot of people say, oh, Mike, you come up with these ranges a lot, and sometimes you're telling us look for the opening range. What if the opening range never breaks? Guys, there's opportunity on the interiors, there's opportunities on the breakouts, but it's important that you treat that as such. So as long as we're within the weekly opening range, you're in, out, in, out, in, out. None of this, okay, I'm going to scale out and try to wait for the break. We just don't have the validation for it. So especially for dollar yen, what is this going on like? This is what, 18 days, 16 days of lateral movement. The longer the lateral movement holds, the better the breakout. So what I've been looking at is this. It could be two things in play here, and I've been showing both of those on the charts here. So you have the ascending pitchfork formation. Obviously, we adjusted that from last week. We were using that high and that low, kicked it out to that low and that high, which gave us the better gradient here. But what I want to also focus on, I'm just going to delete this for a moment, is this possible just simple channel formation, right? Again, breakout. The problem with the break below the weekly opening range is they still have that possible slope support into 120, but it's only a 2-point touch. So we're going to treat the weekly opening range break as it comes. If we close below 2040, watch 120.20. If you are in a short, take a little off, okay? That's going to be a critical pivot in my opinion. If not, we're down again. 119.19 and 119 and 118.18 is the next downside levels. All things held constant. It's just a key range break, and we're going to treat it as such. My humble opinion, I'd love to see this thing pop higher. Love to see this thing pop higher. I think it'd be the trade that would probably screw the most amount of people, which is usually what happens in these real coil ranges. But the dollar may be heavy here. This inflation story may be really starting to weigh if things don't start to change in the days ahead. And I know you guys have been seeing, I don't know if you saw Jamie's latest video, great stuff, right? Not only about JP Morgan's sort of sentiment indicator that he's been putting in the reports, but also about some of the extremes that we're seeing. And if it does start to pan out in risk, it'll be an interesting play here for the dollar. Questions on dollar CAD. Range of nearly 4 weeks continues to hold just above key support. We're looking for the break. Sterling, number 6. Here's British pound. Everything's doubling back, but everything's holding the range. So for sterling, the major tidbit that we've been looking at is 42.36 into 43. Major resistance zone on the weekly charts, the yearly highs, nothing that left need be said here. It's still important to note that that last high on the weekly chart did reference a divergence signal, and we are at resistance. So our preferred play has actually been to play pullbacks off that region. The levels were clear. We were looking for the pullback to break uptrend support. We're bouncing off that level today instead of breaking it. So here's what the trade looked like. We called on the first day of the month, guys. I gave you an update right on this day as we posted an outside day reversal in sterling off of the objective yearly highs. We turned our focus lower. Levels of interest of us was 41.31, 41.38, excuse me, which was the close, the high day close for the year. And also actually longer dated back, a nice little pivot in price from the high we made in February of 18. Long story short, monthly opening range set, and then we had basic 3-point trend support, and we were looking for a break there to validate the shift lower. Well, we got the test, we got the drive, the short trade worked out perfectly, but here's a hold of uptrend support. Here's what it looks like on the intraday charts. Keep in mind, we do get GDP figures. I was just looking at that. We're supposed to get a stellar 27% clip year on year GDP for UK tomorrow. So definitely keep your eyes on that. It's about 10 a.m. Eastern here. Excuse me, 2 Eastern. So they're right in the middle of the European session there. But look, it's a tricky one. Again, I was looking for this break here. I'm going to zoom this out. Here's the 120, and here is what it looked like on our last update for the pound. So this is from the 6th. We were still in this really nice descending formation. In fact, we made a really beautiful tag of the upper parallel and the 618 retracement right into the start of the week, reinforcing the weekly opening range. And that was kind of my focus. So yesterday looked like a legit weekly opening range break to me, guys. Wednesday break looked good. First downside level, 40.80. We got that clip. I was looking at to see if we can get the drive at least into trend support for the pitchfork that we've been following off the low. Let me just zoom this out and show you. This is the same pitchfork, guys, we've been following since April and March. No change. Resistance, support, rebound just ahead, right? If this clears the parallel, most importantly, 41.86, aside from that being the 618, and in fact, there's a new 618 in tag now because that actually needs to be dropped to here. But you get the picture. If we get past this, now as you're flirting with an objective break of the weekly opening range high, you're risking another stretch towards key resistance 43. Remember where we are in the weekly chart. This whole zone is critical. So this might be an interruption. This might be an interruption here. We'll see if this inflation read has any legs as we get into the US Open. Watch these opening ranges. Hey, man, good to see you. We covered DXY, Euro, Aussie, Dollar, Yen, and Dollar CAD all, okay, basically testing their opening ranges for the week today. Sterling, really nice rebound just ahead of support. Again, can't make any assumptions. The short trade that we had on this earlier in the week after that outside reversal last week, this was what needed to break, and it didn't. So could get a little bit more upside. Key resistance on the daily chart is going to be right with the monthly open. That's right 142 again. It's now going to be key resistance on this trade. Questions? All right. So I'm going to take a quick segue out of FX to hit Bitcoin because I gave you an update on this, guys, and no one, people seem to be in disbelief for some reason for how well these charts are working. You can see it on the Twitter handle kind of just popping out at all anytime I tweet a chart of this, but what a trade. You know, as I gave you guys the kind of rundown earlier in the week, you know, the more people have been involved in this, the better the technicals have manifested. And while we do get those snoozer periods where it's a complete rip up, the levels have been insane, We talked about 36. I'm not sure what this line's doing here or why it's here, but we were talking about 30,655, right? Into 3205. Now we first highlighted this critical region, if you guys recall, as soon as we dropped right on the May break. 2 levels we highlighted: the 2021 low day close, the 1618 extension off the decline from the yearly highs. Look where we bottomed. For the next month, almost, right? Last 4 weeks, we've been talking about the major critical zone of influence as a break of this key range. need to push below 30,655 or breach above 41, essentially 42, 41,929. Ever since that break, we've tested that as resistance, as support, as resistance. Okay, a little consolidation, and that's what I was showing you guys previously. We had a little consolidation there, broke to the downside. We talked about that earlier this week. Levels of interest, once again, 32,000, 30,655. This thing registered a low at 31,000, 3102, just a hair off that key target. Strong rebound, monthly open resistance being challenged right now. And what does this mean for Bitcoin? Well, here's what it looks like on the intraday chart. And here's what I showed you guys. I didn't want to just clutter up the chart with two of those charts, and I don't really follow a Bitcoin weekly per se because the skew, the log scale just goes to zero, you know, anything pre-2010 basically. So I had the chart for you right here, and you could see again that consolidation, beautiful break, did charge a nice drop, and here's the upswing. So I've removed that slope just for clarity to keep this thing nice and clean, and we're still looking at this gradient right now, and that, my friends, is what we're testing. 37,000, excuse me, 279. We're there right now. This is the objective June open. Whoops, don't want to do that. This is the objective June open. Looks like we're trying to push through. As I said, last week's swing high there, or this is the monthly opening range high, gives you 39.49. Key resistance and bearish invalidation, what would put the bulls clearly in control, in my humble opinion, is 42,000. Okay, now, what else can I say about this? If we take this into a weekly chart, just for argument's sake, I always want to see, well, maybe this week is an outside weekly reversal. It doesn't turn out to be an outside weekly reversal, but if we do cap 39,000, 39.4, that would be a breach of the objective monthly opening range highs. So we do need to be kind of mindful of, it's not a very strong reversal pattern per se yet. And that's my concern on this. I do think that, as I said, I put out a piece on this on Daily FX yesterday as well. I do think you get a little bit more of a pump, right? You had divergence all into these lows. So if we look at this from an objective standpoint, leave all the media headlines and all the emo out of it. Lower low, lower low, lower low, higher low, higher low. So you're getting divergence in momentum. Price has responded to downtrend support. It's only likely that we would get a test of downtrend resistance at least, right? So I don't put it past this thing to possibly see another pump higher below 42,000, guys. In my humble opinion, the risk is still for a deeper drop. Okay, next downside target's 27.2, 27.169 right here. That would be just a basic 618 just of last year's rally, not even taking into account the broader picture, right? This is just from the 2020 advance. That would be the 618. So I don't think we're out of the woods yet on a broader time frame, near term. Yeah, you know, maybe Bitcoin does take a little bit more of a relief rally after this beat down. Keep in mind the drop that we materialized last week, or last month rather, that was the 53% plus decline in Bitcoin. A little bit of a capitulation, false break of the downside. Yeah, I think you could probably see another pop still. Ultimately, you'd need to clear 42 to validate a reversal. Any questions on this? Anyone here trading Bitcoin? I know a couple of you guys, I get an email from one of you guys every now and then saying you're looking at bottom fishing here. I would be, again, my humble opinion, you know, if we do head lower, especially if we crack 30.65, I would be a guy, I'd be a guy definitely trying to pick up for you and just scaling into a longer term position. It's not a trade for me. I don't know, Jay or K, you are KM, you're trading Bitcoin, good. Kay, let me ask you a question. What are you trading that on, if you don't mind me asking? You know, I put out a lot of trades. I've been getting a lot of Binance. Okay, yeah. I get a lot of questions about where you should be trading Bitcoin. Guys, I'm not very deep in the realm, but what I can tell you is um, Coinbase is kind of like the most, has been seen as sort of the industry standard from the guys I talk around here in New York on the trade desk. That's what we're using. The spreads aren't so tight though. Okay, so if you're looking to actively trade Bitcoin, you kind of want to stay away from one of those. Yes, Kay, I agree with you. FXCM also has Bitcoin. I'd want to go on an OTC type of trade with a broker that may be offering Bitcoin through some sort of CFD contract or something of the like. I know that's limited here in the States. Okay, for those in the United States, I don't know if FXCM allows, well, they're not allowed in the United States to begin with, but you get the picture. So if you're looking for it as sort of a longer term thing where you want to sort of dial in on a larger decline, my go-to again, like I said, would be Coinbase. I'm not very, familiar with their withdrawal features and all this yet, so we'll find out. But for active trading, if you're someone who wants to active trade Bitcoin, yeah, your best bet's to look for a broker that just includes Bitcoin contracts. Yeah. Eman says, yes, I did, but it was a long and did a fortune. Well done. God bless you, Eman. Yeah. Guys, back in the day from doing webinars when people were asking, can Bitcoin possibly top $500? And here we are talking about a drop from 60 to 30. So yeah, it's a sentiment driven trade. It's a sheer volume and sheer momentum trade. Eman said she did it through her bank. Interesting. But there seems to be a more growing adaptation of wanting to use that and getting involved in this market. And you know what? I'm getting more excited too because the technicals are getting cleaner and cleaner. All right, so that's all I'll say on Bitcoin at this time. But taking your setups always, oh, cheers. Hey, man, you're always humbling me. Okay, real quick, I do want to hit Kiwi and gold, and then we'll take a look at SPX, but I just wanted to look at the 10-year real quick. So do you remember, guys, this chart? Oops, wrong chart. Look at this thing. You can't make this up. I've been showing you this chart for months. The major level that we talked about for the last couple of weeks has been 152, 153, 618 extension from the decline off the high. Un, deux, trois. The lows that he made from right back here in April. Break. Accelerated drop. Where's resistance today? Get out of here. Right? So look, we found support at that 100-day moving average, right? It looks like, is that the 200? 100. It looks like we're offering a little bit of a bounce here. Could see a rally even back up to the median line. Wouldn't put me out of the bearish realm still. I'm looking for that wash, 145. Two equal legs for a corrective move off the high would be 141. So let's see. Now, this inflation print, again, it's going to be interesting to see how the markets digest this, because the larger the read and the bigger the variance, the more noise you get from officials. It's transitory. It's transitory. So there's going to be some point of counterbalance here where the markets are going to buckle. Levels of interest, like I said, on the downside, 145, 142, 141. We'd need to get through the median line, okay, for this to dissuade this bearish tilt. Monthly opens 158. So that was the May open. Here's your June open. Something to take note of. Keep an eye out into the close of the week. That's the US 10-year yield. VIX, just for giggles here. Remember that low that we were talking about? Look what we did the last 2 days. On Monday, we literally dropped into it and bounced. And then yesterday, in case that wasn't enough of a test, we went right into it again and then closed higher on the day. Something's up. FOMC on tap next week. Things are getting dicey. All right, let's get back into the last three setups here. I just wanted to hit on Kiwi real quick. I haven't really been involved in this trade um, this week, and I don't think anyone begrudges me that. It looks like the makings of a possible outside day reversal already today, which I don't know what I would do with that. But at the end of the day, here's the slope. Looks pretty clean. It's just that we haven't gotten any conviction momentum. What do I mean by that? Well, here's your monthly, the weekly open. You set a low, you test a high, you test the lows again, you test the lows again. What's this yesterday? I know it's only Wednesday, weekly opening ranges. Wednesday, usually the breaks on Thursday or a late Wednesday break is your best bet. But here's a break, turn right ahead of the median line, and a rally again. Look, this is weekly open resistance. We're testing it right now. I'm gonna just dodge the May open here. And your monthly open is right into key resistance. That's the only thing I like about this. Let me take a step back. Kiwi dollar on the weekly chart, guys, looks like this. Major resistance 72.65, 72.95. It's the same zone we've been talking about ever since the massive run up there in reversal back in February. Made an outside day reversal off the highs, outside weekly reversal. Wasn't outside, excuse me, just a weekly reversal off the highs. And we've been kind of focused for the last 5 weeks, 6 weeks, 8 weeks on this key range, 71, essentially into 72.92, the high close, excuse me, for the year. So we're still there. Nothing's changed. Oh, so here, by the way, guys, the 10-year, again, sorry, I'm going out of order here. Just wanted to like to do side by side so you guys can get a visual on it. Here's how that panned out. So no change to that. We broke that level. There is the moving average. There's the lower parallel. As far as Kiwi, again, here's what the Kiwi chart looked like on the weekly. We just showed you that. No change, same key range. Here's Kiwi on the daily. There's the turn, rally, failed, and we're just consolidating right here. Intraday, key resistance, same downslope is in play, failure, and we've just been doing this. So another one where what looked like a seemingly clean opening range break at first yesterday just quickly fizzled out. Look, I do like that we're seeing weekly open resistance. Ultimately, I do favor the slope holding for a downside move towards 71, but I just don't want to get increasingly aggressive on it because it continues to teeter out. Every time you get that downside break, you kind of whipsaw, it gets faked out again. This was a larger recovery. I wanted to see median line hold there. It was a nice level, didn't hold. 75% parallel, didn't hold. So I've been looking for a decent entry. I wanted an entry here, gave up once it broke through, it turned back. Was looking for an entry. I was hoping tonight we'd wake up and have a little bit more of a pop near uptrend resistance. Didn't happen. So look, if we break the median line, the game plan hasn't changed. 70.94 is the 2018 open, 70.85 is the 618. I'm sorry, let me just put that to the new high. There we go. And there it is. Okay, so that is Kiwi. Last on my list here, we got gold and SPX. I thought I put gold late in the session, Eman, because I knew that you were gonna want to see this one. So here's what it looks like right now. The inflation picture, obviously, guys, obviously for gold is bullish, right? Whenever you get an inflation rip like that, no surprise to see the move we're seeing here today. I just want to bring your attention to the broader picture. What a critical resistance range this was. 1909, 1922. Okay, the high close from the records that we made back in 2011, the 618 retracement, a decline off last year's high, the median line, all there. That's what we need to clear on a weekly basis to confirm resumption of the uptrend, 1923. Write it down, jot it down, put an alert there, whatever you want to do. Initial support, 1850. 2021 high week close. That's the January open high week close. Loaded. You also have 52-week moving average right there as well. So the yearly moving average. That's 1850. 25% parallel for the current operative slope right there. If you just took this one weekly chart and just operated off of this one weekly chart, you'd be doing all right. You'd be doing all right. So here's what it looks like from the daily chart. Obviously, the monthly opening range is still intact. The beauty of it is that the monthly opening range is taking shape right below resistance. Again, the high day close, 1918 for this year. The 618 that we looked at on the weekly chart, 1923. That's where we petered out. We made an outside day reversal off that level into the start of the month, turned our focus lower. There's a couple of targets we had in between, but the major key level and the bullish inval was 1860s, a basic 236 of the advance, but it was also slope support, 1 touch, 2 touch, 3 touch, 4 touch, confirmed slope support. It's what we just rebounded off today. Initial resistance right back into 1898, excuse me. Again, the monthly open is 1906. I want to see that hold if we're still moving lower. Today's inflation read, again, don't take those prints as change in trends unless that prompts price to do so. So while we're tempted just to be, blind bullish on that inflation read, 5%, when's the last time anyone's even seen a 5% clip on year, we do need to clear resistance first. So again, yearly open resistance is 1998, keep saying it backwards, 1898. And if we clear that, and specifically the weekly opening range highs like 1903, again, 1904, that's the monthly open, that's what would mark resumption. Okay, we've come off of uptrend support. So yeah, I would be of the mindset that if we do get a break of the monthly open, if we do get a break of that 1905 level, 1904, yeah, you're probably going to see the resumptive move. 1923 is resistance. Again, beyond that, you're looking at 1950. 1956. Huge. Very important. Pay attention. By the way, not only is 1918 all this key levels that we just noted, but again, I'm going to stress to you that it's also the monthly opening range high. So aside from all my Boutros or Jamie or SB or daily effect, it's fact, right? If we clear that zone, it's the range highs for the month. In fact, it's also going to be that slope resistance, which would, in my mind, likely fuel an accelerated run to the upside in gold. All depends on whether we clear the yearly open. Till we do, we're still in this slope, plain and simple. Okay, it kind of puts this in the same picture of all of the FX pairs that we went around earlier that are still trading within their respective weekly opening ranges. All of them got those false breaks yesterday, taking them all back with today's inflation number. But that inflation number hasn't changed the technical biases yet. So we'll see if those ranges hold as we get into Thursday trade. All right, last but not least, good old SPX. Don't really have much to say on this except that it's likely to be a slow melt up. So I was doing a funny story. I was doing I was doing a presentation again for the execs at IG. We was giving them a market outlook, and they were asking about some of the volatility tendencies and what we're looking at, and it was right here on the 8th. Price looked like it had marked an outside day reversal right off the high, and I was looking at this with great interest, saying, the last 4 times, don't take my word for anything, the last 4 times, here's the outside day reversal in SPX off the high. Here's an outside day reversal of SPX off the high. Here's an outside day reversal of SPX off the high. Another one and another one. So I think one would be able to safely surmise that outside day reversals tend to be pretty decent signals in SPX. Now, it ended up not being an outside daily reversal, not by much, and we kind of put in this doji. The next subsequent 2 days, and obviously today hasn't even opened yet, still continues to hold that same range, guys. So if we breach higher, the yearly high comes in at 42.45. The next measured target would be 43.01. Monthly open support is right at 41.94. The high week reversal close, that's my near-term bullish inval. That's 41.83. So if you make it below this on a daily close basis, I do think you spill for a corrective move in SPX. All things held constant, it's a slow grind higher. It's a slow grind higher. And if this range for that single June 8th move breaks to the upside, then yeah, I think you look for that topside pop. Here's what it looks like on the intraday. Modified pitchfork off the low from May continues to govern this pretty decent. It's not the cleanest per se, but the gradient's been okay. But it highlights again that 43 level on the upside if we breach. Risk to rally still remains well below 42.45. Key support, bullish inval, still going to be with that 38.2 at 41.60. Questions on SPX? Just so happens that the problems we're having these days, guys, it's not so much that the levels aren't clean. They're clean. We've just got no damn momentum. And we are, again, the longer this doldrum holds, the better the moves are going to be. You have to keep in mind that we are heading into major event risk. Really, it does put a whole focus, a microscope on what we get from the FOMC next week. This is unprecedented. Okay, 5% inflation, this radical run in pricing, the unprecedented amount of just sheer liquidity being put in both by not only the Fed, by everything that's happening with the stimulus on the fiscal side, certainly puts an inflationary runaway picture way more of a concern, way more of a red flag. And we'll see if the FOMC has anything to say about it next week that could curb market appetites. But that's all I got on my end. If you guys have any questions or trade setups you want to review, throw them on the message board now. Otherwise, we will go ahead and wrap things up. Tomorrow, you do get GDP figures out of the UK. Like I said, it says expectation forecast of 27.6% year on year for April. So we'll see how that comes in tomorrow morning. And then obviously into the close of the week, you got University of Michigan sentiment surveys here out of the US expected again to climb. We've continued to see upside surprises on that. I expected to see a print of 84 tomorrow. So we'll see if the sentiment picture is quite as rosy as everyone thinks. All right, if there's nothing else, I'll go ahead and wrap things up here, guys. Stay nimble. If you've been a little frustrated with this market and the lack of movement, yeah, I'm there with you. Okay, pick and choose your entries, keep some powder dry. We are going to get a surge in volatility. I'm quite confident that something on the prospects of FOMC and this inflation read will start to move things. But stay nimble. Have an awesome weekend. Eman says, have a lovely, peaceful weekend. God bless. Hey, same to you, Eman. Many thanks to you, Jay. Have a great weekend. Kay, Steve, everyone in the room. I'll see you on Monday for the free session on Daily FX. There won't be a Tuesday session next week, guys, because I will be doing that Wednesday webinar for Daily FX too. So I'll see you on Monday, Wednesday, and then right back here on Thursday. Best of luck trading, guys. Have an awesome weekend. Cheers.